Hi everyone, this is Paul Lange from Disciplined Trading Strategies with this week's Trade of the Week video. This is the week ending 10/30 of 2022. The stock was Intel, 10/28/22. That was Friday. This is based on a Tier 1 gap and an entry on a 5-minute DTS buy setup. Management advanced reward to risk 3.2 to 1 as of the end of the day on Friday. Before I get into some comments and details on the trade, what is for free members this week? Well, we have a big presentation on Wednesday, an educational event called Recent Market Analysis. You're going to like this one. You can read about it. And if you're a DTS member, you will get your invites. You should have already received one, I believe. And if you're not a DTS member, hop over to the DTS homepage, disciplinedtradingstrategies.com, and you'll see how you can become a member and attend the event on Wednesday. Here's the daily chart for Intel. A couple of reasons this was picked. Number one, it was one of those semi-rare Tier 1 gaps. This is the don't miss a trade, drop everything, sit there, make sure you get into this type of trade. It's on Intel, which was a big name stock, which I normally don't like, but this gap was near perfect. I want to point out also the stock was traded twice. The first trade made money, so I didn't do it as a separate trade and there's nothing to hide. I made money, got out, and then re-entered. I'll show you that on the intraday chart in just a minute. The profit total shows both trades, but the first trade only made about a half of an R. So there's our gap on the daily chart. We're going to open right there. I consider that to be a Tier 1 gap, which means it is near perfect to move higher in that case, and likely going to do so fairly early. 60-minute chart showing you not much more detail, but just simply we did clear this area. It's not always necessary to do that, but in this case it cleared and was just in kind of a perfect area. Boom, there it goes, open, and had a little jaunt lower the opening minutes and then moved higher. Actually, it moved higher quickly initially, then moved lower, hence the reason for my second trade, and then moved higher into the close. 5-minute chart showing you some good detail now, just what happened. We open right here. We ran higher. I actually entered the first trade pre-market, just before the market opened, just a couple of minutes, and took that pop up into here somewhere. Got pretty close to the high of the day, I think right on the high of the day, sold a third, and then trailed the rest of it under this area in here, so got out. Net, the first trade made about a half of an R. I think I mentioned in the room about 30 times that if I got out, I would be getting back in again unless it totally collapsed. Here was the re-entry, which is the purpose of this video. Entry over 28.27, stop under 27.95. Fairly snug stop. Simply in this case using what many of you would probably recognize as a buy setup. The entry actually was pretty close to that as well, even though usually it's not the right way to do things. That is exactly what was done here. All target end of the day on a walkaway. I ended up taking half end of day and half as a swing trade, holding it overnight. This also was featured in the DTS Long-Term Trader, so I'm really more than doubled up on it because I also have it as a long-term position. Target to swing. The 1-minute chart doesn't show you a lot more except some specifics on the entry. That 5-minute buy setup, there's our open, and our 5-minute buy setup ends up being right in there approximately. It's a little bit above that actually, just a hair above, waiting for some extra strength, and that's pretty much it. Target half into the close and half held, so the whole target ends up being that 29.09 as far as the profit shown here. Gapping stocks usually happen because of earnings, although it can happen for any reason. I don't really care what the reason is. I also don't care what the earnings are or what anybody says about them. Certain gaps gives an advantage, and it's the reason that we learn gaps as a separate concept. It doesn't happen every day, and gaps are not all I do by any means, but when you get a nice gap like this, it's worth knowing how to trade it. Sometimes the key is knowing not to miss something. Many traders may have been faked out by the fact it's made a new low. That is not in any way bearish on a gapping stock like that. It has nothing to do with the technical edge of it going higher. If you enjoy trades like this, come join us in the DTS Trading Room. If you go over to that DTS homepage, figure out how you can join us. This is Paul for DTS. Good trading, everybody.